Good morning, everybody. It is Thursday, May 29th. We are heading into month end, and we are going to start our prep here today for the ES and a recap of yesterday. So yesterday we gave you our levels, and you can see them here. We do have these available on our website where we have our daily levels posted. These are all of the rotational zones and key levels. So we had yesterday, our rotational zone was between 58.60 and 59.44 with our pivot at 59.06. And we can see how this played out yesterday, where we held our rotational high at the open, came under our minor line in the sand, right to our pivot, and that was a long for 20 points. Back down right to our major line in the sand, and then over holding our pivot, and then all the way through the rotational and ending up last night right at our high zone at 6,008. We laid this out for you yesterday, expecting the downside pressure as the insurance would get bought throughout the day for the different catalysts, especially for NVIDIA earnings. And again, it's less about the narrative that you hear. So whether it's NVIDIA earnings or the tariff pause, when you are day trading, it is more about the positioning. And we saw that all the insurance had been bought right to our line in the sand. And that strong reaction tells you that everybody in Chicago is coming in with billions of dollars to defend here, not just on the futures, but on the equities and everything they're buying, they're deploying capital. And that sends us right back up to our high zone. And once we get there, that is where we knew that the market makers would sell because that's when they're at the most risk on the upside, and they would introduce a lot of supply, and that's what we've had all the way back down. So that's what happened yesterday, and we did post in our room just to show some of the um, the insurance being bought. So at 3 o'clock, we had gotten close to our red zone. At 3:30, we did get into our red zone. And then we were right up there again at 3:10. We saw that finally come in at 3:30, which told us now the insurance would be done. We could start looking for the market to give us long signals. Doesn't mean to buy blindly, but means to start looking that that is going to be done. And so when you see that here at around 3 p.m., that insurance is coming done, you're starting to look for reasons to buy. So you buy for 20 points. And if it comes down to the line in the sand, there's your second buy. When it came back down to our pivot, it broke straight through, no reason to hold. And if you want to learn how to trade this, we do have courses starting in the fall. We go over this with our students, give you all the entry criteria, all of our different setups, as well as proprietary tools for all different instruments. So with that, we will go ahead though and get started for today. First, a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. And so we'll start off again from a high level here, starting top down as we always do. Commercials are net long. No surprise, we get our green telling us to look for more upside on the ES, and we've had upside again yesterday. And again, this goes back to the positioning, less about the narrative, less about what people want to tell you is happening, and the financial media and all the catalysts, and more about the positioning that commercials have the longest position they've had in over a year, so they have a reason to push the market and they see all of the order flow, so they have the tools and the skill set as well to do so. Now, on to high yield, it ticked back down yesterday. We started to get close to that 3.5. We told you yesterday to watch for that, that it wasn't there. It was still signaling it was on watch, not any triggering for any changes, and still on watch. But the failure to get over says that risks aren't present yet in the high yield space. And now on to bond volatility. We mentioned yesterday that bond vol was signaling more supportive direction and flows. And again, that's what we saw play out yesterday. Did we know that the tariffs were going to get a pause on them from the courts? No, we had no idea about that. But the system and the process tells us that the bond market and other markets are saying that somebody somewhere likely knows something, and there is not the risk that everybody is expecting. So we will follow our lines in the sand as from a more macro perspective, there are still risks present, and we'll get into some of those here shortly. But right now, we will watch for on bond vault a breakout over 110, telling us that we can see more deflation in assets. Otherwise, we will watch for a move back down to 88, which will tell us that a short-term top could be in the market, and we'll be looking for bond vol to break back to the upside. On to multi-asset volatility. We are watching for the VIX to break under 18 to signal more longs. And again, if that gets under 15, then the bull market has a lot more legs. So that will tell us that risk is out of the market. Um, for right now, volatility is still on close watch over the coming days and weeks as the tariffs have been blocked by courts. But the White House has said they will appeal that. So if they stay blocked, then profit margins may not face as much pressure, and we can see continued volatility breakdowns as there would be less risk in the market. But if the appeal upholds, then volatility will pick back up as more uncertainty will creep in. So again, that's if that appeal holds. And we already went over our insurance yesterday, seeing that move up on the insurance buying and then back down. Now, for the more macro risk, it is going to be a while, multiple months until we see our systematics come in and start deploying, four or $500 billion in capital. So this is very similar to what we saw in 2022, where we rallied until July and then started our sell-off after OPEX in July, after the second quarter closed, and right before the earnings season started. We saw that in 2022, and this is setting up very similar. And that's the biggest risk that we face is that the systematics are not supporting the market as everything else is. And then just to show you a mocked up chart here of what we went through earlier, all the different trades that we had yesterday from our levels. Now for today on the ES only, for our subscribers, I post in the room NASDAQ. And if there's any others you want, please let us know in Discord. But today we are looking for rotational price action from 58.72 to 59.70.25. Our pivot is 59.21. If we get over 59.70, our new upper pivot is at 60.19 and our upper target is 60.48. If we get a move outside of our rotational zone to the downside, which is much less likely, we are looking for 58.72 or under that 58.72, we're looking for 58.23 and 57.93. Now, again, our line in the sand is at 59.27 right at our pivot. Our minor line in the sand is at 59.57. So we'll need to be watching those as we get closer to the closer to those levels today. So then to show you here on the ES, these would be our line in the sand, 59.28 right now, real time. These will move throughout the day, but again, you can zoom in and see these, and this is available for all of our subscribers. Now, your other key levels today on the SPX or the ES futures, 59.19 half, 59.54 half is going to be a big level. 44 half is a multiple confluence major level. That is our key to the upside. It was yesterday and it is again today. So if we can hold 44 half, we have room for upside. If we get underneath that, we are looking for back to that 25, 29 area. Upper level that's going to be really important today is going to be 84 3/4. That is where we have about $2.5 billion sitting as an offer right now. And that will likely be resistance first. If we can get over that, then we have more of a clear move up to 60.14, 60.17, which is up around our upper pivot at 60.19. And then beyond that, our upper major level to pay attention to is 60.36 3/4, which is in between our upper pivot and our upper target at 60.49. So that's it for the ES today, guys. Again, as always, control your risk and stay safe trading out there. Make sure that you're still around tomorrow for trading. That is our job each day, not to risk everything on one single day. So have a great day. And if you have any questions, please post them in Discord.